What up, team? Guess what? I'm back. We're back. And guess what's also back? The SPACs, baby. We're back. What's going on, my SPACs attack team out there? I hope that you guys are happy that, guess what? The SPACs are back, baby. Good morning, like Chris says. Let's bring them on. What's going on, my Chrisopedia?
Hey, I just put it in the chat, guys. We got to get some likes. SPACs are back. Chris is back. Mitch is back. It's a great day, but yeah, SPACs, Mitch. We've been talking about this for months, right? Even when SPACs fell out of favor, find the companies that you see having that long-term potential. And then what happens? Eventually, the market realizes, hey, the valuation on these companies should be more, right? And they're finding current SPACs, they're finding new deals, and they're also finding, de-SPACed companies that had fallen below $10. That's something we talked about too, Mitch. And they're finding them, and then we're seeing shares cross over, $10 again. So it's an exciting time for anyone out there covering SPACs. And as our viewers know, we didn't go away. And we'll still be here too to talk about all the big stories. And we did have some big deals too happen over the last couple days while we were gone away from the show, Mitch.
What? Some movement out there in the SPAC land? I think I need Chrisopedia to tell me all about it. That's why we're going to get to the headlines here. Yes, vroom, vroom. Carl is right. I have a little bit of some jet fuel lag in me from hearing these cars vroom by me, Chris, over the weekend. But you, like always, inform us. Let us know what's going on in the SPAC world, whether it be a new merger analyst. I even heard there's a short report out. It's a crazy day, Chris. Do what you do best. Inform us. Take us back to those headlines and tell us what's going on in the SPAC industry.
All right, guys. Yeah, big day out there. Try to get to all the important headlines. Obviously, there's been so many over the past couple days. But up first, we did get earnings from Cazoo. So if you remember Cazoo, CZOO, this is the company that merged via the Ajax SPAC, right, which had the big names, some former founders of companies. It sold off as people didn't really like this purchase. But Cazoo is a leader in the UK, auto resale market. So they reported third quarter revenue, 174.4 million pounds, up 267% year over year. They also saw an improvement in the retail gross per unit to 1,003 pounds per car. They sold 13,074 vehicles in the third quarter. That was up 209% year over year. They also said that despite a dip in inventory, they're seeing huge demand from customers, materially increased wholesale volume as more cars sourced directly from consumers. So that's something to watch going forward. They got 10% of their third quarter retail units sourced directly from consumers. Compare that to 6% in the previous quarter and 2% in the year over year third quarter of the prior year. So that's something to definitely watch, that they will be getting more units from customers directly. Then one of our big news stories this morning, we had Wallbox, WBX, which recently de-SPACed. They announced a partnership with Uber. So that strategic partnership will simplify the transition to electric vehicles for Bay Area rideshare drivers using Uber. We saw Wallbox shares take off today. WBX, we're up 52% right now. These shares hit over $36 earlier, and we're up triple digits. This is big news, though, a partnership with Uber. This is a good electric vehicle charging infrastructure play. We've had them on the show, and we have talked about this one many, many times before, but big move out there. And then DraftKings. DraftKings, remember, had the rumor that they were trying to acquire Entain, a leading UK sports betting and gaming company that also has the 50% joint venture with MGM called BetMGM. So DraftKings announced today that they have terminated offer talks with Entain, and that they will not make a firm offer for the company. CEO Jason Robbins said, "We are highly confident in our ability to maintain a leadership position and achieve our long-term growth plans in the rapidly growing North America market." I think we do still see some continued consolidation in the sports betting market, but I think maybe DraftKings sits back for a little bit. They do have that pending deal with Golden Nugget Online still being processed as well. Lightning eMotors, ticker ZEV, reported an increase in orders and reorders from CalAct Vehicle Purchasing Cooperative. ZEV has been one that has been known to fly on news. We're up about 5% today, but keep an eye on that one. And then Tattooed Chef, TTCF, a plant-based food company, announced that they will acquire Belmont Confections for $18 million in cash and stock. As someone who does not eat plant-based foods, I'm not familiar with this acquisition, but I can only assume that it is a confection company using, plant-based rather than maybe some of your dairy and egg products. So it could be a little niche play there from them. Another one of our movers yesterday, RDW, Redwire Space. This is one that I own. I've been talking about for a long time. So Orbital Reef, which is a commercial space station from Blue Origin, of course, founded by Jeff Bezos, will begin operations in the second half of this current decade. And among the companies helping them are Redwire Space. This was a big deal. We saw shares move on it. Redwire Space offers over 50 years of experience. They've completed over 150 missions, and they've enabled nearly every space mission, including missions to Mars, Pluto, and landing on multiple asteroids. And then also remember, I gave you the hint that there was a tweet out sharing a video where a Redwire subsidiary Made in Space lead product manager Alicia Carey hinted that they would have a potential partnership with Amazon. Now, keep in mind that Blue Origin is not owned by Amazon, so you could still get another news item here from a possible partnership between Redwire and Amazon. I think that's important to note. I don't think this was the news that she was referring to, but we will find out soon enough, as she said that would come in around a month. Lion Electric, LEV, received a conditional order for 1,000 electric school buses, the largest fleet in North America, yesterday from the Student Transportation of Canada. So that's 1,000 all-electric Lion C school buses. It has to get approved by Canada's Zero Emission Transit Fund. If it's approved, it would be the largest operator of zero emission buses in all of North America. Those deliveries would begin in 2022 and continue through 2026. I've called this out several times. Lion Electric, Proterra, Arrival, all these companies competing in the electric school bus space. I just see electric school buses will be the vehicle of the future for these school districts. Canada looks like ahead of the US on this, but a big deal for LEV. Another mover out there, EQOS, Equinox, is a crypto exchange. They announced that they've listed Polkadot on their platform. They call it a game-changing, viable alternative to Ethereum. This is a former SPAC. It completed its SPAC merger back in October, Diginex. This is one when we did our crypto SPAC show that we talked about. So EQOS had quite the morning. We are fading now up around 15%. And then we also had that big move in BKKT yesterday, backed another crypto SPAC. And then turning to our deals, I hit this one on live trading last week, but got to highlight it here again on SPAX Attack. DWAC, Digital World Acquisition Corp, initial enterprise value of $875 million with a potential earnout of $825 million, so could be valued at $1.7 billion, bringing Trump Media and Technology Group public. So according to the company's presentation, they will release Truth Social, which will be a social media platform that will take on Twitter and Facebook. They will also launch TMTG Plus, which will take on Netflix and Disney. TMTG News, which will take on CNN and iHeartMedia. And long term, they also plan on taking on Amazon Web Service, Microsoft Azure, Google Cloud, and Stripe. You can pre-sign up for Truth Social now. And former President Donald Trump said he's excited to send out his first truth on Truth Social very soon. That platform scheduled to launch a beta testing in November. Trump had 89 million followers on Twitter. So a large following. The thing I noted last week was that this presentation, 22 slides on the shorter side for a SPAC deal and no financial projections. This was trending on Twitter for several days. We saw shares go over $100, very high interest, trending topic, bringing, topic back to SPACs. We also got Iceberg Research yesterday saying they are short the shares, and we are seeing a bit of a fall now today. Then our other big deal announced yesterday morning, BRPM bringing Faze Clan public. If you don't know Faze Clan, it's a leading esports team and media company. So it values the company at $1 billion. Founded in 2010, Faze Clan is a leading digital content platform targeting Gen Z and millennial fans. They have a huge brand recognition, 10 competitive esports teams, 30 worldwide championships, and participate in some of the biggest esports leagues. Social media reach of 350 million followers. Can't stress that enough. Huge following, huge built-in fan base. They actually rank third for individual sports teams cross-platform actions, trailing only the Los Angeles Lakers and Golden State Warriors. 80% of their audience is between the ages of 13 and 34, which is a key advertising demographic. The biggest North American percent is the NBA with 45% for fan base under the age of 34. 85 influential personalities on their roster, including Kyler Murray of the NFL, LeBron James Jr., a basketball prospect and son of LeBron, musicians Lil Yachty and Offset. So they plan on doing a multi-platform growth initiative. They said subscription services, fan clubs, real money gambling, live events, virtual dining concepts, game publishing partnerships, and even NFTs could be in their future. Revenue $50 million in fiscal 2021 and $91 million estimated for 2023. And then we do have a couple votes this week. GNRS tomorrow with TheraPlant and True Harvest. That is a cannabis deal. MCAD voting on Better Therapeutics tomorrow. And on the 28th, TDAClottery.com. Mitch, that was a lot of headlines. That's what I've got. Those two big deals, which maybe we can get into after the interview. But SPACs are back. There's so much to talk about with SPACs out there.
That is true. That is true. SPACs are back. I should have my volume good now. Let's see what happens if we can continue this run. We've been waiting for the next wave, talking about when we could potentially see the next wave. I know that you kind of saw something out there on the internet that kind of could point towards this, right?
Yeah, one of the things I like to use for articles sometimes, right, is Google Trends, right? Trend is your friend, they say, right?
Mm-hmm.
Google's still the top search engine out there. It's what people use to find stuff. So what happened was we had the Trump SPAC happen, right? And then a lot of people were like, hey, what's a SPAC? That didn't know what SPACs were, right? So back in February, we kind of peaked with SPACs. And that's when the trend on Google, you see. But look at that right-hand side. Look at how we're rising up again. People are searching for SPAC. They're searching for SPACs. They're looking for these tickers. They want to know, hey, which one can be the next runner? So, it's an exciting time to be covering SPACs right now.
Well, like I've said, there's waves to this game, and I think you're going to start seeing potentially, could we have another wave here? Of course, like always, there's going to be winners and losers. So that's what we've brought up before. Before when we had this run, it was like every SPAC was a winner. Of course, now we're going to be a little bit different, guys. We're going to be looking for some winners and losers to really stand out. And where did those winners and losers come from? From meeting the expectations that they're putting out there. All right, guys, let's go ahead. Let's get into it. Up next, we're going to be going into an interview with Science37. Yes, a biotech SPAC you guys might not have heard of, but are going to definitely hear more about it today. Chris is going to knock that interview out. Then we got a lot to talk about on the watch list. We'll get into the top movers of the day. I know that you had some of the top movers already listed for us. I'm going to keep that scrolling at the bottom so that you guys can see some of the top movers right now. Definitely, we want to get you guys the best stocks to talk about, but we also want to unlock SPACs. So this is the time when we unlock SPACs. Let's go ahead and get right into Science37. Chris, I'll let you take over here.
All right. Yeah, perfect. Another exclusive interview here on SPACs Attack. Joining us on the show today, we have David Coman, the CEO of Science37, that ticker SNCE. David, welcome to SPACs Attack.
Thanks so much for having me. Appreciate it.
Of course. So as you heard, we're SPACs Attack. We're all things SPACs and companies that have de-SPACed. So we're talking with you. You completed the SPAC merger. But one of the first questions we always like to ask the CEOs is, why the decision to go public via SPAC, and was a traditional IPO also considered by your company?
Yeah, I mean, the reason why we decided to go with a SPAC is familiarity, the funnel, and it's free. So let me explain what I mean by that. The company that we entered into a merger with was LifeSci Acquisition Corp. 2. That is from a company called LifeSci Advisors. So LifeSci Advisors advises hundreds of biopharmaceutical companies on everything from recruiting to IR services to communications. And they have the most successful SPAC out there right now that they already led with. But more importantly, the company's familiar to us, which means they invested in Science37 back in a previous deal. So they're very familiar with Science37. We're familiar with them. They also brought in hundreds of biotech companies, which ultimately are our customers. And so we are servicing the pharma and biopharma industry in order to accelerate clinical research and get more drugs into market faster. The final note there on the SPAC and why we chose this one in particular is that it was free, meaning there were no warrants associated with it. And as you know, in the SPAC business, the warrants has come under a lot of scrutiny. We fortunately had the foresight to take a look at what the market landscape looked like. We did look at a lot of other SPACs. We did look at the IPO opportunity. But given the pipeline that we thought that LifeSci would be able to bring, the familiarity they had with the company, the fact that they had no warrants associated with it made it a very attractive offer for us in order to move forward. I guess the other point on this is that one of the great things about SPACs is that you not only can go get the SPAC and the trust that goes along with it, but there's also a pipe that you build from that. And the trust itself was about $80 million. With tons of great investors like BlackRock and like Perceptive and RTW and several others who also came into the pipe. And so they were comfortable enough with the story. And we built a $200 million pipe on the back of that 80. And that is all about validating the price and what we're coming out into market with. So, super important for us, I think, to have the confidence as we go into the public market to have the dollars behind us and familiarity, and then the confidence in terms of the overall price that we're coming to market with.
Perfect. Thanks for that background there. So, there may be some people watching who have never heard of Science37. So before we get into, the individual questions, give us the brief summary. What is Science37 all about? What should viewers out there know about the company?
Yeah, so Science37 is bringing universal access to patients and providers anywhere as it comes to clinical research, ultimately accelerating the development of clinical trials. And just to kind of ground you in the way the clinical research market has been going for the last 60 to 90 years is a biopharma company will go off and they'll set up a whole bunch of relationships with clinics around the world. So hospitals, clinics, et cetera, we call them sites. Each of those sites have their own people, processes, and technology in order to be able to operationalize what happens on their individual site. Throughout the clinical trial, you need to have someone fly between each of these individual sites in order to make sure that all the sites are compliant and consistent in the way they're actually delivering all the capabilities. And if this worked great, you would be in a world where you're enrolling the patients on time and you're delivering the clinical trials at the rates that you want to deliver. But in the clinical research industry, about 80%, that's right, 80% of trials are delayed. And I don't know any other industry where that's acceptable. And one of the fundamental issues behind that delay is the ability to go find patients. And when you talk about a world where you're dependent on all these individual sites around the world to go find patients, what you're doing is you're limiting yourself to the geographic catchment area of each of those individual sites to be able to find your patient population. Today, only about 5% of providers are participating in clinical research because it's a burden to be able to set up all those processes and people and technology within your own institution, which means they're only going after a limited number of patients, and only about 8% of patients are ever approached about joining a clinical trial today. So big issue. If the issue is about speed and the rate limiter on that speed is about finding patients, why do you want to go through a small pipe that only represents about 5% of the total population? So this is where Science37 comes in. Science37, again, we're creating universal access to patients and providers anywhere, and we're doing that through an operating system. And that operating system has two components. It has what we call specialized networks, and those include telemedicine investigators, mobile nurses, remote coordinators, connected devices, and all of these plug into our technology platform. And that technology platform enables all the workflow for all those independent parties to be able to interact, ultimately gathering the evidence that you need for the clinical trial, both the safety and efficacy data, and then harmonizing that data to be able to submit to FDA and the other authorities to be able to get approval worldwide.
Yeah, perfect. I mean, it's mentioned in your presentation that, this is a industry that hasn't had many changes over the last 90 years. So when we hear that number, I mean, we know how much technology has grown. So it seems like maybe there's some room to make some changes. So one of the things that stands out to me, and anyone who follows, biotech knows that it takes a long time to launch a drug. So listed in the presentation, it says it takes 7 to 13 years to launch a drug. What can Science37 bring to the table? How does that timeline get impacted by the trial service that your company provides?
Yeah, so let's take that total patient catchment that I just talked about a second ago. 8% of the total population is being covered by your traditional site network today. So then what do you do with the 92% of the rest of the population? How do they participate? And if they don't have any familiarity that a trial is available, then they're not going to be able to participate. And so Science37 makes it aware to any patient, no matter where they are, where they live, that there is a trial they can participate in. We pull them in through our platform, and that platform has an online, typically using your own phone that you currently have, you get connected directly into a provider. Ultimately, that becomes the telemedicine investigator that's on your trial. We take them through the informed consent process, and they're enrolled. And it doesn't matter where you live, we're pulling you into the trial. Now, when we service that patient through the clinical trial process, we can do everything online with the telemedicine investigator, direct, one-to-one. If there requires some form of interaction, a physical interaction, there's two things we can do. We either send them to a local provider in order to get a procedure done, or we send a mobile nurse directly into the patient's home in order to be able to administer. It could be a 6-minute walk test. It could be delivering chemotherapy. It could be inspecting a skin abrasion, you name it. But that nurse is in the patient's home in that case. The patient is there in the comfort of their own living room, and we're teleporting the investigator into their living room with them so they can triangulate care without actually ever having to leave the house. And so this is that catchment area is the ability to get the patients in faster. And then the ability to actually maintain the relationship over the course of the trial is also extraordinarily important. A typical trial will have dropout rates between 70 and 80%. With Science37, we're getting in the mid 90s in terms of the retention rate for patients over the course of the trial. In addition, one other important point to keep in mind is in a traditional clinical trial, you're limiting, again, the geographic areas around those sites. And what's happening by default is that they're only about a third of the diverse patient populations are able to participate versus what the real population is. If you think about a drug that is going to market and is going to be used universally by every population, to actually exclude patient populations from the trial will give you an unrepresentative sample. So what you want to do is get a sample that looks like the population that's going to actually be taking that drug. So it's extraordinarily important to be able to find every ethnic group and be able to pull those different ethnic groups into the trial. And so Science37 has been able to do that at 3 times the rate. So if you take a look at the hundreds of thousands of patients that we've recruited, engaged in clinical research today, and cut it across the population mix, it looks just about like the full population. And that's an important differential versus what typically is seen in a traditional clinical trial.
Yeah, I love that. I mean, that's one of the things that stood out in the presentation was that Science37 has been doing, virtual trials since 2014 and has this telemedicine, portion of it as well. I think that's important. Something we think when we think of trials is, everyone having to maybe go to their doctor office or go to a hospital to get the drug, and then they have to keep coming back every week, to report. And being able to do this, with technology and the virtual aspect, I think is so important going forward.
Yeah, let me tell you a story. Actually, the first clinical trial that I ever experienced, and so I've been working for more than 30 years now, and I've been in this business for over 20. And the first trial I went to, back 20 years ago, was at a site in coastal Carolina, and I sat there in the clinic, and there's a gentleman that came in, Frank, and his wife Eleanor came in. They came about 2 hours and 15 minutes in order to be able to make it to the facility. They sat in the waiting room for 45 minutes waiting to see the doctor. They finally got to see the doctor, and they have all this paperwork that they put in front of this poor patient and try to talk him through everything that's going to happen within this clinical trial. And they wanted him to sign it and to get engaged in the study. And in this process, he also learned that he needed to come back every month for the next 2 years and do that same process. And I didn't mention, this is a Parkinson's patient. And so the average patient has to travel 26 miles in order to get to their clinical trial destination. 26 miles, which is a burden on any condition, much less Parkinson's or MS or cancer. And so having the ability to engage anyone anywhere is extraordinarily important. And let me give you another case example here. A trial that came to us really as a rescue. The company was looking for a blood assay, so that's a blood test to predict colorectal cancer. So think about Cologuard, but a blood test instead. And what they needed to do is to get a blood sample, and they needed to get a colonoscopy to see if that blood test was predictive of colorectal cancer. And the biotech company did what every biotech company does. They went off and hired a clinical research organization. The clinical research organization does what they always do, which is set up a whole network of sites around the country. This is a US only trial, so 100 sites. 2 months into enrollment, they had less than 200 patients engaged. The problem is that they needed 14,000 patients in order to ensure that they had enough of a sample to figure out whether or not their blood test actually worked to predict colorectal cancer. And so think about the length of that trial and how long it's going to take in order for them to get this all done. And so we took a look at all the sites that they had enrolled in the trial, and we did a zip code lookup of the populations around it, and it represented less than 3% of the total population. And so what are you going to do? What are you going to do with the 97% of the rest of the population that can participate? And so this is where we came in. We said, listen, let's go after that 97% of the rest of the population. We'll set up a meta site. We found patients through social media, through the Colorectal Cancer Alliance, through pharmacies, through providers, you name it, pulled them in through our platform. So they did the online consent through their app. We pulled them in. The platform triggered a phlebotomist to go to that patient's home to do the blood draw. We had our telemedicine investigator send the patient to a local GI clinic in order to get the colonoscopy report done. We pulled those two data into our operating system and ultimately submitted that to the central lab for review. Our first full month of enrollment on this trial, we enrolled 2,000 patients. And so it's just a sea change relative to what you could do in a traditional trial by not getting yourself locked into specific geographies. Every single clinic in America, in this case, again, US only trial, was available to any patient. And that's the whole core of the Science37 model, utilizing our specialized networks and our technology in order to enable all that to come together in one place.
Love that. That's perfect. And that brings to my next point here. We have a slide in the presentation that shows all your, well, not all, but some of your big customers, right? And I mean, we're talking well-known names: Amgen, GSK, Genentech, Sanofi, Regeneron, and we're also seeing, academic and government customers too. So can you just talk a little bit, about how your platform is able to win over these big biotech companies? Are they buying into the Science37 clinical trial platform? And what kind of deals are these? Are they, a one-time fee or a recurring revenue stream?
Yeah, I mean, not only are they buying into utilizing the platform for their clinical trials, they're actually invested in the company. So, Sanofi Ventures was early on in the company. Amgen was early on in the company. Novartis is early on and also part of the pipe, and GV and several others. And so the promise of clinical research being accelerated is extraordinarily important here. If you take one extra day of commercialized value of a clinical trial, so one more day on the market, it's between $600,000 to $8 million, depending on the type of product. So just think about day after day after day, the amount of opportunity is lost if you're actually not in market faster. And so our ability to go find large pharma, midsize, biotech, government, academic, the application is everywhere because the issue is pervasive, and the opportunity to accelerate patient recruitment, enrollment, and ultimately bringing more drugs to market faster is exactly what the biopharma market really needs to do and wants to do.
Awesome. And then, so there is a total addressable market listed at $195 billion for R&D spend. Can you talk a little bit about, the portion of that segment that Science37 is attacking and how big this market could be for your company?
Yeah, it all depends on how you cut it, but there's $195 billion being spent in R&D, and it's growing to about 5% annually. So it's an unlimited market, and if you want to take that market and sort of subdivide it into the component parts that we think that we can address the most, the best, it's really about 60 billion. And so, I mean, it's still $60 billion of that 195, and I think we're being a little bit conservative in the way that we're thinking about it, but it's virtually limitless in terms of what we can go after. And, we're seeing that from market interest in terms of the, new pipeline that's being built. And so we published a little bit of pipeline in our initial roadshow deck. We're not publishing going forward, but it's obviously stronger than what we actually published there. But our booking growth has been outstanding, as well as the Science37 name is starting to, get onto the map and on everybody's radar, and we're feeling it. And it's, really positive momentum in the business.
Perfect. And now being a publicly traded company, everyone wants to know what's next, right? So we've got that large TAM there. And then in the slide deck, we have, the big growth drivers: core, expand, and extend. Can you talk a little bit about what we should expect out of Science37 over the next couple of years?
Yeah, we're going to be growing geographically, commercially, and technologically over the course of the next several years. We talk about core, which is the business that we're in today and the activities that we're doing in terms of triangulating the patient and an investigator and the nurse in the comfort of their own home, being able to find patients and doing that faster, being able to do connected devices at scale, taking the platform and making sure that it isn't just a platform that Science37 is using, but it's a platform that goes on every single clinical trial, enabling all the CROs, clinical research organizations, to be able to use our capabilities as well, so that we really can provide on that promise of having universal access to anyone, anywhere. But then as we expand out from there, there's also additional categories. And you can see the word CRO there. It's super important for us to enable clinical research organizations to be able to use our type of capability so that they can supplement the traditional clinical trial model. And we made some very public announcements there in regards to PPD and Syneos, which are two of the top 5 players in the space. And we're working with many of the other ones as well. Can't show the details. But also there's other categories here, including clinical outcome assessments, which is something we're building upon. And that, by the way, is a $2 billion industry in and of itself. Real world evidence, extending the platform to do more of the late phase activity, which we haven't been focused on in the past. And then adding on diversity. And I said earlier that if you take a look at the cross section of all the clinical trials that we're doing, it represents basically the same view of the total population. But we're also being pulled in specifically to find those populations and pull them in what we call a meta site. So many companies are utilizing us to supplement a traditional trial methodology, where we become a virtual trial site that sits in their network and then go after some of those diverse patient populations that wouldn't otherwise have access to it at all.
Yeah, so we've got some of these slides up with the different forecasts going forward. So just for viewers out there who aren't familiar, so net bookings compounded annual growth rate of 52% expected from 2020 to 2025, and revenue CAGR of 73% 2020 to 2025. David, can you just talk a little bit, how much of this is coming from, existing deals? How much of this is kind of coming from those growth initiatives that you laid out? And is there the possibility for any M&A to maybe expand on these numbers going forward as well?
Yeah, so when we put these data up, we had about 81% coverage of our backlog for 2021, and that looks very strong. You can also see that numbers in there were really set to first quarter alone in terms of the results. But not only have we beaten the first quarter expectations, the second quarter expectations we beat on every single measure. Bookings, we closed at a little over 85 million. At revenues, we did more than what we accomplished for the full year of 2020. Again, this is at the halfway mark of 2021. And so you can see the business accelerating and us outperforming the projections that we put in place. So the plan here is to make sure that we not only put numbers in that are strong, but actually put numbers in that we think that we can hit and beat. And it's extraordinarily important for us.
Perfect. Another question we always like to ask on here, and it can always be a tricky one, right, is competition. So, obviously you're trying to disrupt the current clinical trials that are in place, right? That legacy units. Are there any other companies out there, doing what you're doing as far as moving this technology forward? And if so, maybe how do you differentiate from them?
Yeah, sure. So we not only have technology, which is something that's, I think, important to note about Science37. So our technology is strong. We have first mover advantage. We've been doing it since 2014. We've invested more than anybody else, we think, on the planet into the platform itself. But we also have the specialized networks that sit on top of it that enable the investigators and mobile nurses and coordinators and patient communities that sit on top of it. Now, if you look at the if you look at the competitive environment, there are technology players that are out there. Most of the technology players, have persisted in the site-based world for years and are now trying to look at a more of a patient-based world. There's some of them that came out and as a patient-based kind of profile, but again, they don't have the years or investment, and they don't have any of the specialized networks that sit on top of it in order to be enabling the type of clinical research operations that Science37 is able to do, which really puts Science37 on a great plane and on our own with any size relative to the other players that are out there.
Perfect. I did see one analyst note out there, Cohen and Company initiating coverage with an outperform, a price target of $14. Do you expect more analyst coverage out there? Are there some names following the stock that we can expect to hear from soon?
Yeah, we expect a lot more coverage to come out. We know of a few. I'm not sure I could actually talk about it, but we do know that there's other coming out behind it. I expect it to be equally positive as the Coman projections that were just released a couple of days ago. And I'm flattered by it, but I think that when we look at it internally, we see a gigantic market. It's humongous. It's really limitless. We have the product that is superior to anything else that's on the marketplace today. We have an amazing management team that, I've handpicked most of the team from my past lives, and I found the best person at every single position to pull into this company in order to lead us into a new frontiers. And so we feel extraordinarily positive about the prospects of Science37, today, in the near future, and then in the long term.
Love that. Yeah, I mean, people leading a company is extremely important. Got to have that right team in place. Well, David, before we let you go, I did see a couple questions from the chat. That's one of our favorite things to do here on the show, right? Our loyal viewers and, potential investors in your company. We also have a lot of fans out there, that I don't think were familiar with this company that have now, added it to their watch list. So that's a great sign here too. But this question, actually a couple questions from NCAL here. We touched on how fast are they growing, the size of the market, but the one I wanted to ask you was, what's the biggest obstacle they need to overcome? Is there anything holding Science37 back, and, how could you get over that?
I think that probably the biggest rate limiter for growth of the company has always been the model and whether or not the model works. And the answer is that it's working extraordinarily well. And you don't get the numbers that we talked about up front. We're recruiting patients up to 15 times faster. We're retaining them up to 28% longer. We're getting 3 times the diversity. And if you take a look at the bookings in our first quarter of 2020, which is the only data that we've reported to date, although the trend's similar, 75% of our bookings in the first quarter were from repeat customers. And so you don't get repeat customers unless you're actually performing really well. And that's what we're doing. So I expect, because it's a new model, for us to continue to have this acceleration as there's more familiarity with it. And I guess another point of reference that I think is important is that this ramp rate for the company did get off the block in some regards to COVID, because if you think about back in early 2020 when COVID started to hit, we had customers that were canceling or holding on their trials completely. In fact, there's a large pharma company with 3 letters that stopped recruitment on all their trials, 100% of their trials, except for 2. And those were the 2 that Science37 was running, because we were the ones that were able to continue the momentum. We didn't have any closure. And so, since that time, the other thing that has happened is FDA and their position on the capabilities that we have, that we call this decentralization of clinical research. There's been more than 70 papers written about that from FDA, validating the model since that time as well. So this is all about momentum, and we're going to continue to grow as we move forward.
Love that. Yeah, I mean, it looks like you've built some fans out there in the chat. We've got this comment from Christine. I had been part of a few bio trials in the past, and this is definitely a huge improvement. David, my hat's off to you, because from what I've heard from clinical trials, this is definitely a huge upgrade. So again, joining us on SPACs Attack today, David Coman, the CEO, Science37, that ticker SNCE. David, thanks so much for taking time out of your busy schedule for joining us on the show, and we look forward to following the progress of your company going forward.
Hey, thanks so much for having me. And if anybody wants to find out any more information about clinical research through Science37, please, you can just go to our website, www.science37.com, and look up any additional information. There's a lot there.
Awesome. Well, thank you, David. Have a great afternoon. And we will follow the company, in the future. Exciting times ahead.
Thanks so much. Have a good one.
All right, guys, another exclusive interview here on SPACs Attack, SNCE, Science37. We talk all the time, right, about SPACs and de-SPAC companies. Find the ones that are disrupting technology. And here you have one, right, disrupting the trial, for these drug companies. I mean, you heard him say, right, during COVID, that when other trials were stopped, they were able to keep going, right, because of that virtual element. I love that. This is an industry that was ripe for disruption, and you have it here with Science37, SNCE. Mitch, what did you think?
Well, definitely one to put on the radar, like was mentioned in the chat. One of the things that happens with biotechs is what's the worst news you want to hear, Chris, when you're in a biotech stock?
That either a trial stopped or a drug didn't get approved.
100%. This is what scares me out of most biotech. Maybe David can have me coming back. And this is what I'm going to be looking for.
Yeah. So, I mean, why not grab a company like Science37, right, where you get exposure to all the companies, right? Put your eggs in there instead of just finding one drug company, right, that could, plummet on one bad trial. But I like the fact, I mean, you heard him say, too, how much money each day these companies could potentially be missing out on the longer their trial takes place. I mean, that's huge, right? Especially for these publicly traded biotech companies. So I'm a big fan of this one here, and definitely on the watch list, SNCE.
Yeah, it's something that, I didn't get a chance, and I'll have Chris reach out and ask this question specifically, is how do companies, when they determine that they're going to choose Science37, how do they release that in the financial statements? How is that released? Because I know that I'm going to be paying attention to when I see Science37 in those filings. I'm going to be like, okay, so that's how they're going about it. I can start taking a deeper look into if this is the trial that I want to maybe attack. Because, like we just talked about it, that's the reason why I don't dip my toes in too many biotechs, is I just don't know how the trials are being done a lot of the times. So this is going to definitely give me a little bit more backing in that. Then I can start making my investment decisions on picking out the biotechs. I know you and I, Chris, we were talking about it in pre-market.
Yeah.
How it's definitely a difficult area to invest, but this could be a potentially something that maybe we don't even, if you're not buying science, but at least for the whole industry, could help out investors continue to make investment decisions. So definitely a cool company, and I'm glad we got it on. So Zoltan, I'll give you a thumbs up because I didn't ask for this company. You got it. I appreciated it. And that's what it's all about, guys. Just like you guys out there, if you guys have a SPAC that you guys want on SPACs Attack, let us know, because this is the time. We're seeing the wave come back. The interest comes back. We're definitely going to go after different companies. That's why we haven't stopped getting you guys the information. So definitely give us a thumbs up if you guys enjoyed Science37 there. And let's get into the watch list, Chris. I know there's a lot of moving.
Yeah, there's a lot of movers out there. So a lot going on in SPAC land, right? And
definitely
it's been an exciting couple days. But I mean, Mitch, I look at the watch list today. I mean, Wallbox up 75%. I talked about that in headlines, right? That deal with Uber. I mean, this is an electric vehicle charging company. I've said, I like a lot of these charging companies, right? And I think you could have exposure to more than one in your portfolio, right? Because let's face it, going forward, as we adapt to electric vehicles, we will need charging infrastructure. And Wallbox is one of those companies, and that Uber deal, nice validation today for the company.
Well, let's take a look at the watch list and see what's moving out there.
Sometimes left alone in the
All right, guys, going to go ahead and take a look here to see what's moving out there. Let's go ahead. Looks like we got Diginex here leading up there 20.6%. But of course, I don't have all the crazy movers on here. So this is not for kind of exactly the top mover of the day. Of course, let's take a look a little bit more at some of these different kind of lidar companies that are out there right now. I want to call out some of these charts. You know, we've been waiting for a couple of them. If you can look at Velodyne here, getting off that $6 price point, couple bottom actions. I do like off of that 620 or 640 risk now to see these companies get back. Could they get back towards 10, 14? We'll see what happens with
Look
these.
at that volume, Mitch. I mean,
Yeah,
I think that's a perfect example, right, of talking about SPACs being back. I mean, look at that volume in VLDR today. So LiDAR is a big story today, right? LIDR shares are up 49%. But as you pointed out, Velodyne also seeing interest, right? Because people are kind of trying to find the next thing, right? Also, AI got a initiation from Roth Capital, so that one moving too. You know, so or that is LIDR AI. Also, there's some other lidar players out there too. You know, moving on this news. But again, you know, find these ones that are under $10, right? These former SPACs, these de-SPACed, because remember, they did the deal based on the $10. So now essentially when the shares go to $5, the market is saying that the company was worth half of what it was when it completed the merger. And a lot of times I just don't think that that is the issue here. So, I mean, how about like OUST, Ouster is another LiDAR play out there. You know, there's a ton of LiDAR companies, but yeah, Velodyne, I've always kind of liked Velodyne because I feel like they had, you know, some good partners, some good deals. So VLD are a decent sized move today as well.
Yeah, you know, I'll definitely keep watching these, you know, to see what happens with kind of these stocks because these are the ones that have been on my radar, Chris. You know, at least for me, I think you got to keep these on watch. I think they're going to start moving. There's a couple of them. It's not just one. So definitely you got to play more of a basket or try to pick a winner, but we'll see what happens with these.
How about
RDBX
Redbox?
Don't stop. RBDX, the one stock that what? We interviewed right here, right, Chris? This is why you come watch SPACs Attack.
Yep,
why?
Up 29% today. Look at that move.
This was, I think, trading at like $10 when we brought it on. So this is what it's all about, guys. It's not what we're saying that the stocks that we're going to come on SPACs Attack are going to rip through the roof. But one thing is, you could have got the information about that stock and gotten a way deeper analysis into Redbox by just coming on right here on the SPACs Attack. So you guys hit that thumbs up, hit the subscribe below, hit the bell so you get notified when we go live. And we're going to keep watching to see what happens with these. But I think you're going to start seeing a bunch of these go up, down, up, down. Look at this one. 3 pushes, guys. 3 pushes to break out. What do we do when we want to see that 3 push towards the support? Hold that support, that 442 on downside. If it comes back up through that level, I'd be looking for a breakout. We'll see what happens in Redbox. Lots of stocks moving. It's not just those stocks. I mean, the ME's moving today. Really good day for me. I don't know if there's news out on this one. Chris maybe could check, but look at this. Since about the 14th, it's been going straight up. One thing that I will start noticing, Chris, and I've been calling it out, was what? Pay attention to these monthly candles, right? We've been waiting for what? Monthly greens. Monthly green candles. Look how me had a monthly green candle. Then we start getting that turnaround, right? And now if you look at a bunch of these stocks that are starting to go up, what you're going to see is they're going to start closing on a green monthly candle. As we know, next week will be the end of the month. And with that being said, boom, you start seeing what? A reversal in the trends, especially these long-term charts. Let's take a look at a chart that's making a move now. Let's take a look at even that Velodyne chart, right? So this has gone sideways for what? For pretty much about a month. And now is creating that real bottoming candle, that bullish look. If this closes above this level, it's going to give us a bullish engulfing reversal look on the charts, which can definitely give us that next wave up. We'll be watching for these charts and these waves to continue reversing. What's going on? What other stock do you want to take a look at, Chris?
Well, we have MP Materials got a short report right before
Let's
we
take a
started
look.
the show, Mitch. So I have not dug into this full short report. This is from Grizzly Reports, which isn't one of the larger short traders here, but they essentially call the company a smoke and mirrors show, and that they can trace it back to the Chinese government. So they're saying that all this talk about MP Materials being a rare earth mineral play in the US is false. Again, I have not done a deep dive into this, but I've loved MP from the start. They have real revenue. They've shown revenue growth, and they have that mine in California. And again, I think part of the reason is right now, the way that this is set up, you have to go through China for rare earth minerals, and they're trying to fix that. But that also could mean that right now they have to be part of that supply chain. So just something for people to watch. But there is a short report out here on MP.
Well, this is what they stated, not us here, but this is what they stated directly from that report. They say they see a 60% downside in the short to medium term once investors and regulators wake up to the company's shenanigans. Dun, dun, dun.
And then,
That
Mitch,
word,
how about
that word itself?
Yeah, shenanigans sounds dangerous, right? I don't know if I want to be part of shenanigans, but I don't see shenanigans here. Every time I say that, I just giggle a little.
Yeah, right. I don't know why.
BRPM, Mitch. I've followed the esports space for a little while, and I know that Faze Clan, right, is one of the bigger names out there. So they announced this SPAC deal, and the thing I've seen, Mitch, on Twitter is you actually have some of the streamers in the esports space asking, what is Faze Clan's ticker? How do I buy shares of Faze Clan? Right? So I think we see this thing continue to see momentum, and I actually think this could be a de-SPAC trade as well. So I'm not in this one. I'm waiting for a dip. But I think when this thing actually completes the merger, 3 to 6 months from now, I think this thing's going to have a nice premium as a publicly traded esports peer play.
I think keep it on watch. Put it on the radar. All right, let's take a look at BKKT. I got a lot of people hitting me up, telling me, but Mitch, you were a bear. You were a bear. What happened? Well, I can't call out catalyst. Look at this thing. You want to ride this bad boy? Right on top, guys. If you guys got this, power to you. I had my hands off of this. I wasn't going to get into this one, but look at that move. What a rocket, and then a rocket right back down.
And full disclosure, I was long this thing from when
you
it was
rode the rocket.
Well, so I was long from when it was VIH, right? Below $11. I sat back. I didn't have a very big position, and I sold yesterday. I think around $25, $26 a share. So I missed the peak in this thing, but ultimately made a winning trade on it. So no complaints, but they had the big news yesterday, a partnership with MasterCard in the crypto space. So here you have two stories, right? You have
big name mentioned with a little name.
Yeah, you have backed, right, a crypto SPAC, and you also have crypto stocks getting hot because of the price of Bitcoin. Those two things added together yesterday for backed, I think, were just too big of a story to miss. That's why you saw BKKT up triple digits. And with that being said, I think some of these crypto SPACs could get hot again. CIFR, I saw mentioned in the chat. That's one that's been called out. Also, FPAC, which is bringing bullish public. That's a Peter Thiel crypto deal. So CIFR is a mining one. I think these crypto ones get hot again, Mitch. I mean, we might have to do a crypto SPAC show again because it's going to be a big area, I think, as SPACs come back.
Yeah, I'm definitely taking my shot. I did take some shots into some SPACs. I'm looking to see what happens with them. But there's a lot of things moving out there. It's not just one area. You can just go up and down the list and kind of see. Look how much green there is here, guys. So definitely look out there, look for your investments, and see what opportunities are out there for you to nail. But we got to get out of here. I had too much fun today. It's already 12:05.
Yeah, it's fun
to get you guys over to the
fun
SPACs
to be
Attack.
back. It's fun to be back. SPACs Attack. No show tomorrow or Thursday because we have a Benzinga event right here on YouTube, but we will be back on Friday. Mitch, I know some people asked in the chat about Formula One. Where can they see you talking about this weekend's race?
What? Come on over, guys, to Money Mitch. I'll show you guys a little bit. Might blow your ears a little bit with that backfire, but hey, show on up if you guys want to talk a little bit about some Formula One. Also talk about how I did do some research about the stock. How did I do some research about the stock? Come find out on Money Mitch. Up next, guys, you guys got I think you guys are going to learn a little bit of autonomous driving IPO, CYN. Guys, find out. You guys know how I like my autonomous. Let me know what you guys think of CYN on the Power Hour. Coming up next, we'll see you next time on SPACs Attack. Until Friday, you guys, thumbs up. We'll see what happens. Are the SPACs back? Hit that attack. Hit the like.